Welcome in to a daily editorial here on the KE Report. In this daily editorial, I am chatting with Jordan Royburn, the founder and editor of the Daily Gold. Jordan, we're first going to start talking about gold because you do follow gold on a very regular basis. Using your technicals, we were chatting a few weeks ago when it looked like gold had the potential to break down. But since that level, again, gold bounced pretty much right off that 1200 level. It's been, well, straight up for the last 3.5 weeks. Now gold above that 1260 level, trading currently at about 1269. You said that you would be encouraged if gold did move up and held above this 1260 level. How do you feel about the general gold price right now, considering it still hasn't broken out, but has performed very nicely when it looked like it was going to be breaking down just 3 weeks ago?
Well, I'm a lot more encouraged right now because of what you said. I mean, we're kind of nearing, in the big picture, we're nearing an inflection point, and so there's an accumulation of things that are bullish and bearish. So I would probably call myself neutral right now, but definitely a lot more positive than in my past interviews with you. But yeah, I mean, I have been bearish, and I expected gold would probably peter out in the 1250 range and then come back down. But in addition to that, if you draw the trend line from the 2017 lows, gold broke that at the end of June, and the underside of that trend line, I believe, was around 1240. So in the bear scenario, gold would have rallied back, stopped at 1240, then come all the way back down to 1200. That hasn't happened, and so not only was it able to rally up to 1260, but it's been holding above that for a couple of days, and that's encouraging. And rallying above the underside of the trend line, I mean, that's really encouraging. And then in addition to that, if you look at sentiment in the Commitment of Traders report, I mean, I measure things as a percentage of open interest, and we got down to a pretty low level in early July of 15%. Last I checked, it was around 22%. And if you go back to the highs of last year, that was around, I think, 55%. So what that tells you is that there's a lot of room for speculators to come into gold and push up the price. And at the same time, it tells us that there's not a lot of weak hands in the market that can drive it that much lower. So, and you made an important point when you asked me a question several weeks ago, where you said you noted that the COT had come down a lot, yet gold was able to hold above 1200. And so something happened there in the last month or two where I guess a lot of spec money came out of the market, yet gold was able to hold above 1200. And the fact that it's continued to rise and is well above 1200, that's more encouraging. Now, I know we're going to get to talk about the dollar later, but the dollar looks like it's close to a decent rally. So there's a lot of cross currents to think about with respect to precious metals right now. But I'm definitely more encouraged by what I've seen in recent weeks. I mean, precious metals look like they were at the start of a big breakdown in early July, and it completely reversed course. And it wasn't just a little reversal. I mean, it's been sustained over the last week or two. So that's very encouraging.
Jordan, let's talk about the dollar right now, because the dollar has been in this downtrend, and it is even breaking to levels that we haven't seen since 2014, the very tail end of 2014. The dollar down again today. How much has this downward move in the dollar supported the metals and, in your eyes, helped them appreciate during this summer period, which is usually slow? And as you said, it did look like gold was going to be breaking down.
Well, the dollar's been huge for precious metals this year because if you look in real terms, precious metals have really not performed that well. Even in U.S. dollar terms, I mean, gold has kind of been sideways in the big picture over the last 3 or 4 months. Same thing you could say about miners, despite the fact that the dollar has basically just been dumping with no endpoint. But so now we have the dollar at major support here, the 2015 and 2016 lows, just below 93. The dollar is really oversold. And also sentiment is really negative. The daily sentiment index a few days ago, I think, was 6 or 7% bulls. The commitment of traders for the dollar is also implying that we're probably going to see a bounce at some point. So I think the dollar is going to bounce. I don't think it's going to continue to crash here below the low 90s. But yeah, what's interesting is that the precious metals have not performed that well given the extreme weakness in the dollar. Yet at the same time, they're still holding up okay when it looks like the dollar's probably going to bounce soon. So the precious metals are not, so far, they're not discounting a huge rebound in the dollar. And what's interesting is, and I mean, this comes down to interpretation, because gold against foreign currencies and gold against the equity market, both of those have been very weak this year. And however, they're rebounding from support. And so with respect to gold against foreign currencies, if you look at a 4 or 5 year chart, that there's a positive divergence there with respect to gold, which implies that gold is going to break out and trend higher and get to 1375 again. However, if you look at the short term with respect to gold against foreign currencies, there is a negative divergence there with respect to gold. So it's very interesting. You could go either way. You could say, well, the long-term chart of gold against foreign currencies is strong and healthy. That implies gold's going to move lower. But on the bearish side, you could say, well, this thing has been really weak this year. And so that's implying that gold could go lower in the short term. So it's very interesting. But I think the key thing is this, Corey, is that if we do get a bounce in the dollar, watch how gold performs against other markets like foreign currencies and against the equity market. Because if gold is really holding up well in real terms as the dollar bounces, that would be a really good sign that gold is probably just biding time, before it could have a breakout attempt above 1300. So that's really the key to watch. And then finally, one more thing, the stock market. I mean, if the stock market has a serious correction, that would also help drive money into precious metals. So that's kind of an X factor, I guess you could say.
Jordan, let's talk about the stocks too, because the stocks that I follow, there's been, one that's been breaking out, Novo Resources, but a lot of the other stocks have still been hanging in there. Nothing too significant on the upside, but encouraging that nothing's really breaking down on the low side. And even when you look at GDX, you can see that it has had a nice recovery in the last few weeks, but we haven't even taken out that most recent peak back at the beginning of June. So still, I think a lot of the burden on the bulls for the stocks, but it is encouraging. How are you looking at GDX? And I know that you have kind of your own barometer for the stocks. How's that looking?
Yeah, well, I have my own junior index that I created, and looking at kind of the exploration side of it, I call it a mini GDXJ. That index is actually it's gotten up to its April highs, which is around close to 38 for GDXJ, which is only at 33. So if you look at kind of quality exploration companies, they've been holding up and performing a lot better. Now, back to the ETFs, I mean, GDX and GDXJ have been really weak. And so I think that is definitely a concern. But to step back for a second, I mean, I have been bearish, and so I would point out that the miners really are not doing much, and so that's not a good sign. Given that I think we're probably going to see a dollar rally, I don't think we're going to see like a short-term breakout in precious metals. I would lean towards seeing short-term weakness, and then maybe a little after that, maybe if precious metals hold up well, they could have a real breakout attempt. But yeah, I mean, I think the bigger worry, I mean, some people will look at the miners and say, well, they haven't really been doing that much. That's bad for gold. I could agree with that. But the bigger issue for me with gold is really the dollar's potential to rally. I'm a lot more concerned with a dollar rebound than the relative weakness in the miners because, normally the miners do lead gold, but it's not always a perfect scenario. I mean, you could see gold break out a day or two before the miners, and then a little after that, the miners would just suddenly shoot up and outperform gold. So it doesn't, I mean, you don't always see like the miners lead gold perfectly. And as a technical analyst, it's difficult because there's so many things that you can look at. And sometimes, I can fault myself because sometimes it's like, I want to see the precious metals doing this, and this, and then this other thing, and then they can break out. Well, it doesn't always happen that way. I mean, they can just break out when things don't look that great. So yes, in the short term, I think, the miners, I'd like to see them showing more strength here, but, it doesn't really concern me. I think gold's getting above 1300. That's really the more significant thing to watch, rather than the relative weakness in the miners here and now. And the dollar, that to me is as I already said, that to me is a bigger issue for the sector in the short term than the miners kind of showing relative weakness.
So, Jordan, for a number of other technical analysts and just other analysts in general, including myself, we have been looking to kind of the end of this year as the time when there seems to be a better potential of the precious metals truly taking off and maybe breaking out to the upside. Would you say that the way the metals are reacting this summer, again staying range bound and now even testing out some of the upper portions of their range, even if they don't break out on this run, that it is just further encouraging for the end of the year?
Yeah, I agree, and I think the real key here is the fact that precious metals should have broken down here in July, and they were kind of starting to in the first week, and then that completely reversed course. And then, as I said, with respect to gold, it's had a decent bounce off of 1,200, and still sentiment as far as the net speculative position in the market is still relatively low. And so that's just very encouraging. As long as gold continues to hold above 1,200 over the next couple months, and I would say yes, it's probably in position for a breakout towards the end of the year. And I'll also throw in the stock market. I mean, the stock market has not had a 5% correction in a really long time, and that's kind of troubling because when you have that sort of scenario, when you get the correction, it tends to be a lot bigger than 5%. So that, again, that's something that if that weakens, that's definitely going to be positive for gold, and the miners would follow suit. So, yeah, I think the fact that gold did not break down in recent weeks and negated the little breakdown that was starting, that's very encouraging. And I agree with you. I don't think we're going to see a breakout in the short term. A breakout attempt, it will probably take some more time. We could see some more back and forth action in the sector, but it's definitely setting up where it's going to give itself a chance later in the year to have a key breakout.
And I think that's what we should all be looking forward to. But hey, if gold can break out here, that again would also be very encouraging. But there are at least some short-term signs and factors that seem like they might put a cap on this current gold run. But hey, something that we will continue to follow along with. Jordan, as always, great chatting with you, and thanks for updating us on your thoughts on the metals.
Thanks for having me, Corey.